Welcome to Turbo Impact, where we navigate sustainability in private capital. I am your host, Kenny Chen. Each episode, we sit down with investors, allocators, and corporate leaders shaping the next era of sustainability. We explore how capital is driving the global transition and how today's decisions are shaping the future of impact. Thank you for joining us. This podcast is brought to you by Turbo Net Zero, a pure-play sustainability advisory firm driving impact across the private markets. Hi, Shami. Welcome to Turbo Impact Podcast.
Hi, Kenny. Thank you so much for having me.
This is our inaugural episode on infrastructure. Very exciting. Can you start by telling us about your role at Actis?
Yeah, sure. And maybe for the benefit of the audience, I'll just briefly mention that Actis is a leading investor in sustainable infrastructure. And we mainly invest it in the global south, where 85% of the world's population lives. So Latin America, Africa, MENA region, and Asia, developed and developing Asia is mainly where we deploy our capital. My role is head of sustainability at Actis, and I've been in that role for the last 12 years. And it's a pretty varied role. We invest in energy, digital assets, and broader infrastructure sectors. So with that breadth of sectors, as well as the many markets that we're in, it's a super interesting role as we are looking into lots of different sustainability risks and opportunities all the time. And obviously the field of sustainability is pretty dynamic as well. So lots of new topics come onto our lists, and it seems that very few go off the list. So it requires quite a multidisciplinary approach to really focus on which of those many sustainability issues can be the material ones that we need to really double down on and understand from an investment decision-making point of view.
And the Actis often talks about values drive value. How does that philosophy shape your approach to building a sustainable infrastructure portfolio?
Yeah, thank you, Kenny. It's a really important question because Actis has always focused on sustainability as part of investment decision-making, right from origination to exit. And one of the reasons that we were a very early mover in this area comes back to our heritage, actually. So Actis was created from what is today known as BII, or used to be called CDC. So that's the UK Development Finance Institution. And BII has always had a mission to invest with an eye on sustainability and sustainable development. And when Actis was created, that mandate kind of came across and migrated across. So 25 years ago from inception, Actis was including sustainability considerations into investment decision making. And when we say values drive value, what we mean is that this focus has actually been one that is really closely tied to commercial outcomes. So we're focused on sustainability because it can impact value, either through value preservation and safeguarding of value or through value creation. So the lens has really been one around what can we do which is value accretive to our investments and ultimately to our investors.
When you think about building a sustainable infrastructure portfolio, which sustainability dimensions matter most to you, and how does that differ across your markets and segments?
Yeah, so I guess the issues that we focus on really vary by sector and country. That's your comment. That's your question, Kenny. And some of the topics that we focus on. So let's bring it down a level so we get into specifics. Let's say physical climate risk. You know, it's something that we look at for every single deal that we do, because to be in the business of investing, owning, and operating infrastructure that needs to last and deliver services for decades, you really need to think about, as a prudent investor, you really need to think about how extreme weather and physical climate risks can manifest, because you're thinking about not only your ownership phase, and the risks that come during that time, but also with an eye on exit, knowing that the next owners and prospective buyers will be equally focused on diligencing this for their own time horizon. So some topics we look at across the board, and other sustainability issues that might be material will vary by sector or by market. But broadly, the ones that we always look at, in addition to climate risk, would be, safety would be an obvious one. Physical safety, worker safety, labor conditions, physical security of workers is a top priority. Community issues and making sure that we have a strong social license to operate. The infrastructure is often near and around, shall we say, host communities and local stakeholders, and it's really, really crucial to have their buy-in from the beginning. For example, when you are needing consent in order to proceed, or if you're already operational, then you need to make sure that you have a tremendous amount of goodwill there with the community so that they are supportive of the project, that you are really there as a true neighbor, creating shared value also for them. And that is not purely to deliver philanthropically social impact. It's a de-risking strategy. So any infrastructure investor really needs to be alert to and keeping their finger on the pulse of any kind of grievances that could hypothetically come up, because all of that can manifest as delays, disruption, restricted access, potentially even reputational risks. So that's another area that we focus on quite a bit. And we proactively build those very positive kind of community relationships as early as possible in the timeline of our ownership, precisely to kind of mitigate and create a bit of a buffer or immunization for the future. An example of something that would be location specific, Kenny, would be maybe nature and biodiversity risks. Some infrastructure might be close to sensitive habitats, and others won't be. So that's one where it's important to look at it and determine, is it material or is it not? So again, we have lots of great experience of working near sites with sensitive habitats or species, and doing that in a really positive way, where we minimize and even neutralize risks to those habitats and species. And we have some great examples of working with local NGOs and biodiversity consultancies to actually help boost the biodiversity kind of metrics in and around our projects. So lots of different ways that we focus on sustainability. Maybe the most obvious one, and I'll mention that quickly, is resource efficiency. I think as infrastructure investors and operators, we always think about, is there an opportunity to reduce OpEx, to minimize costs through energy efficiency diagnostics, or water efficiency is sometimes also relevant in our businesses. And of course, we also pursue those types of work streams because there's a really clear link there to the commercial side as well.
Thank you, Shami. Could you share more on the climate side? Because we understand your business infrastructure is a patient business, and infrastructure is a long duration asset. So climate risk can be both acute and highly disruptive to your business. In that sense, how do you embed climate planning into your asset strategy and the day-to-day management over that long time horizon?
Thanks, Kenny. Yeah, it's a great question, and I've already sort of mentioned how this is something that we're really focusing on. We know from the climate science that the number of incidents, extreme weather events, is going to increase. There's going to be more intense events and longer lasting as well. So this is a risk that is going up. So there's a responsibility that we have to proportionally increase our mitigation activities to ensure that our infrastructure is resilient and future-proofed. So as you said, we have a sort of systematic approach at Actis. It's embedded in our approach, and essentially very early on in the due diligence stage, we are determining whether or not climate risk, physical Risks could be material for that potential target asset or project. And if yes, then we would actually do quite detailed work at the due diligence stage to understand what is the resilience level of the assets, which climate hazards are they exposed to, are those acute or chronic? So an example of acute would be, a discrete event such as a typhoon or a cyclone. Chronic hazards would be something such as rising temperatures over the coming years. All of those hazards can impact infrastructure in different ways. So being clear very early on whether there would be a requirement on us as the next owner to invest considerable capex to boost the resilience is something that we really need to know, because it would influence our understanding of the valuation of those assets. So sometimes the deep dive physical climate risk diligence happens before the final investment. At other times where it's less material, it would be something that we plan to do during our ownership phase. But either way, we are looking at opportunities to improve the resilience of our assets. In addition to that, Kenny, we did a piece of work about 2.5 years ago with Actis Climate, where we looked at the entirety of our portfolio. So we handed them 225 GPS coordinates of every Actis project. So a really large number of projects. And using climate scenario analysis, they were able to look across all the assets and identify which hazard events were most likely to impact which project. And they did that on a near-term timescale of 2030 for us, as well as 2050 longer term, and also under 3 scenarios. So a pessimistic hothouse scenario, say of a 4-degree future, a business as usual one on the trajectory we're on today, which is, something like 2.2 or higher, as well as an optimistic kind of 1.5 degree future. So putting all of that together, we were able to understand in a way that we hadn't before which parts of our portfolio at the moment harbor the greatest potential exposure to climate hazards. And then what we did with that top-down analysis is work with our portfolio companies with a bottom-up to understand, well, if that's the risk, what's the mitigant? Because actually what we need to arrive at is our net risk or our residual risk. And that's the journey that we've been on. And so today we've been able to map every portfolio company on a resilience maturity scale, if you like, to understand if we feel that the adaptation measures and mitigation measures are sufficient today, or whether we think that there are areas that require more work or potentially more investment for us to boost the resilience of those assets. The climate risk diagnostic is definitely embedded now across how we make investments on which deals to pursue, but also with the existing portfolio, we're very focused on enhancing resilience, and that requires a lot of cost benefit analysis. What would be the avoided losses if we did nothing? What is the cost of adaptation mitigation? And then what are the reduced losses, taking into account those mitigations? Those are the pieces of analysis that need to be performed in order to arrive at sort of decision ready information for boards to approve further investment to enhance resilience.
How do you see the sustainability playbook evolving to drive value creation in infrastructure? And what shifts do you think will matter most?
So I've talked a lot about, I guess, like valuation and the commercial aspects. And I think all of us working in this space have noticed that there is more emphasis on that aspect of sustainability. We've had some kind of politicization of ESG over the last years, as we all know, and it's more important than ever to really be able to kind of articulate in an evidence-based way how particular sustainability initiatives are driving value for different portfolio companies. So I think that a key piece of this playbook that we're going to see evolve in infrastructure is going to be, more thought leadership on how to do these, how to really quantify the financial or monetary value from sustainability. And Actis has been doing a piece of work on that already for the last kind of year and a half, working with a third party to really understand across one of our funds what are the key sustainability initiatives that we led and stewarded, and what value has that contributed to the company. So we've been able to sort of demonstrate that everything from flood drainage and climate resilience to safety turnarounds, to investing in community social license to operate has a direct link to value, and you can quantify that. And the way that we've expressed that in the analysis that we've done has been basis point uplift to IRR, as an example. Some of those easier cases that are more familiar to us would be energy efficiency, water efficiency, endeavors that reduce expenditure, so they minimize your costs and they translate into value. Climate resilience, we've just discussed the cost benefit analysis formula and how that works. So you can apply similar thinking and kind of really start to embed a way of reporting on sustainability initiatives that doesn't just deliver the output or the outcome through a sustainability lens, but also delivers it through a commercial lens. I think we'll see much more work on that amongst the industry in the coming year or two. And maybe one initiative that I can mention, Kenny, here is that the PRI is working on a playbook on value creation from sustainability, specifically for infrastructure. I'm representing Actis in that steerco, and I think that will be a great deliverable to share with the industry, sort of on behalf of the industry, but for the industry as well. So it's very much designed to be a public good.
Thank you, Shami. We look forward to seeing your great work with the PRI. And I want to ask you about your view on the data center, as data centers are driving a new wave of demand from AI, and there's intense resource usage and energy usage. So from your view, can data center be sustainable investments today?
Yeah, a great question, which galvanizes a lot of thoughts and opinions. I think data centers are critical. They're the backbone of our digital infrastructure in modern day society. And certainly for us as Actis investing in the growth markets, as I mentioned, there is a real, relatively speaking, scarcity of data centers in our markets, where we have also, rapid population growth, more people moving into middle classes. We have also industrialization proceeding at pace. So there's a huge demand for data centers, and that comes, of course, with a huge power demand, as well as in some cases land, and it can also mean that water is a resource that becomes really, really important. But I don't think we should lose sight of the incredible socioeconomic benefits that come from digitalization. And that in itself, I would argue, is a form of essential infrastructure today, just like power and water and other essential services are. Now, in terms of data centers themselves, there's much that can be done in terms of making them as sustainable as possible, from ensuring that as much of the power that goes into the data center is green or renewable as possible. Then you can focus also on efficiency within the system. So the metric for that is PUE, power usage efficiency, and having a very low PUE is something that we focus on at Actis. And amongst our Asia data centers, we have at least met, if not improved upon, the local PUE benchmark for data centers, for example. WE is a water usage efficiency metric. Again, it is looking at water from the same point of view as power. another dimension that one can look at is kind of the green building certification, or how can we design the data center shell to be as sustainable as possible. And then thinking about sustainability, not just from an environmental perspective, but also a social one. And remembering that there is rising NIMBYism globally, more in OECD markets for data center infrastructure. It's really important to think about the social side as well. And as I mentioned earlier, creating kind of social value and economic value locally for local communities, for stakeholders, is a really important way to get that support and goodwill and buy-in from the community, and make it really clear to them what and how you can benefit them socioeconomically as well. So I think there's a range of different ways that, if an investor, operator, owner focused on each one of those segments in isolation, to really kind of fast track sustainability progress, that would be probably the best that they could do today in terms of delivering really sustainable data centers.
Looking more broadly across infrastructure, which sustainability enabling solutions or technologies are you most excited about today, and where do you see the long-term value creation potential from them?
Well, I mean, your question mentions solutions and technology, and I guess we should land on AI, because I think that when I think about tech that supports sustainability outcomes, AI is kind of front of mind. I think we're all quite early in our days of understanding how AI is going to benefit organizations, generally speaking, not just sustainability. But I think there are already some kind of clear signs of how AI can support on sustainability themes, shall we call it. So, an obvious one is kind of climate risk modeling, and weather forecasting. So we've already talked about that a little bit, Kenny, but really the AI applications that you can see today are getting more and more sophisticated. So there are solutions that are forecasting weather events, are using kind of behavioral patterns as well as meteorological data to forecast when you should schedule your preventative maintenance and when you should avoid inspections in the field, so that you are not putting workers out there at a time of that you might have some kind of risks linked to adverse weather. But more specific than that, it can model the likelihood of an extreme weather event in the next few days, using a combination of different factors to tell you that, in 4 days, there's an elevated risk of such and such event near to precisely which, I don't know, it could be like a turbine or a telecommunications tower that you own. So it's like geolocating it for you as well as linking it to a hazard, so that you can go out preemptively and undertake some inspections to ensure that the infrastructure is going to withstand what's coming. Some of these applications are modeling, for example, fire. So they will be able to say, like, if an ember lands here, this is how this fire is likely to spread and at which speed and in what direction. So there's many sort of use cases there, and combining drone footage and LiDAR with AI technology is also allowing infrastructure owners to think about encroaching vegetation and risks such as those when we need fire breaks to ensure that if there is a wildfire, it doesn't come within too dangerous proximity. So I think there's a combination of different technologies that are now delivering really fantastic kind of preventative intelligence in a real-time way, so that operators on the ground can take preemptive steps to protect their infrastructure. I think smart grids is another area, modeling renewable energy generation, quantum, linking that to likely demand from populations and end users, balancing the grid. That's a great example. And just predictive maintenance, kind of a much closer attention to when there might be failures or when obsolescence is becoming a risk, and just really fine tuning those kinds of schedules in a way that we haven't been able to do before. So lots of different applications that have sustainability benefits and are already kind of being implemented on a wide scale. Many of our companies are using the wildfire weather AI kind of tools that I've mentioned. And predictive maintenance is another one where we're also kind of tracking usage of AI across our portfolio.
It's very incredible solutions and technologies that's enabling sustainability today. So next question is, can you share how does impact fit into the way you think about sustainable infrastructure at Actis?
Did you say impact, Kenny?
Yes.
Yeah. So at Actis, we do have some investors that are very focused on the impact aspects, and by that I mean measurable social and environmental benefits that come from our infrastructure, and that's different, linked to, but different to sustainability. So we have developed something called the Actis Impact Score, which is our way of measuring impact. And we do that at the baseline. So day zero, if you like, we measure the impact generated by a business. And then as per impact investing kind of requirements, we then have an intentional impact strategy. And you need to have one, otherwise it's not impact. It's just like an accidental byproduct of your investment strategy. So we have a theory of change that says, okay, during our ownership of this asset or platform, what are the things that we are going to do that are going to increase and magnify the impact socially or environmentally? So we plan that out. So when we do our final investment committee, it's clear to us the impact score at baseline is X, and the forecast impact score at exit is Y. And Y is always X plus something. So what we're looking for is to see how the impact will grow during our ownership time. And that is kind of all set out in advance. So we know how we will increase it. So it could be like job creation. It could be CO2 avoided from clean megawatts generated from a wind farm like the one behind me. It could be health and safety improvements. It could be training programs for a local community to boost their employability and skills, for example. So there's KPIs for each of the areas of impact which we're seeking to increase. And then what we do during our ownership phase every year is measure our impact to see if we're behind plan, on plan, ahead of plan with regards to those kind of predicted impact scores. And then at exit, we measure where did we get to at the end. And then we have what we call our impact delta, which is the degree to which we increased impact during our hold. And some of our investors are very interested in that side of our business. And, you know, we're really kind of delighted to measure impact because the investments that we make are really into essential infrastructure in our markets that do deliver these kind of critical services. So we do know that we have a huge amount of impact on the ground. And as I said earlier, not just environmentally in terms of energy transition, but we work very closely with local communities. So through those community programs, we also deliver a tremendous amount of social impact. So our business, for example, our renewable energy business in India is training hundreds and hundreds of people on renewable energy skills, solar panel installation, for example. That includes a high percentage of women, and many of those have already secured jobs, and some of them for our companies and others for, at other projects. But that shows us that, the training that we provide can not just generate a tremendous amount of goodwill, but truly can kind of be transformative for those individuals who can command better salaries and get on the job ladder, sometimes for the first time. So we do generate a huge amount of impact. So it's only right that we are trying to measure that in an evidence-based way and communicate it to our investors.
I ask every guest this question. What do you think is the most effective way to turbo impact in your field?
Great question. I think that, focusing on how sustainability in the context of infrastructure can really contribute to value preservation and value creation is really, really important, because when we succeed in really blending kind of sustainability work streams into core business, I think that will be, a really important kind of educational point for everybody involved, that these endeavors can be material and they can move the needle. And the more that we can do that and demonstrate that, the more uptake there will be, and the more we'll be able to replicate those successful initiatives elsewhere. So I think that is what we really need to focus on in the coming years.
I want to thank you, Shami, for joining Turbo Impact Podcast.
Thank you so much, Kenny, for having me. It's been a pleasure.
Likewise.